Let's talk about flags. Flags are basically complex pullbacks, but they have to happen in a certain way. There are many types of pullbacks or continuation patterns that we look at. You can find all of these in the other video about traditional continuation patterns. Here I only want to talk about flags because flags are what we trade on the M5, and the continuation patterns we mostly recognize on the M15 to then get in timed on the 5-minute chart. And when we recognize a flag on the M15, then usually it will be harder for us to trade it on the M5. So a flag is basically a channel against the main trend which appears after a drive. So we have the classic structure here, drive, channel, drive. And for a flag to qualify as a flag, it has to be a symmetrical channel. So you can see we had 1-2 waves to the downside. Then when you connect these two up here and simply copy that line to the first low of the channel, we can see the drive is up, the channel is against the flag, and then we get a breakout to the top. And then very often, or often, what is true is that AB equals CD, so that drive following the flag is at least as long as the drive preceding the flag. The way we trade flags is we wait for the breakout and then go with the main trend. And if you can master this pattern, then you are already on a good way to become a profitable trader. As Linda Rushke put it, for example, bull and bear flags, if you master that pattern, you're already better than 80% of traders. They don't happen all the time. They're hard to trade sometimes because they need a lot of patience. This here could also qualify as a flag. If you go down to the 1-minute chart, for example, you can definitely see the swing structure here. 1, 2, 3, 4, 5, small pullback and continuation. This down here is also a flag. If we take this and connect it, you see, we get the flag structure, classic flag structure. And classic theory says that on the daily chart, for example, we need at least 4 weeks for the flag structure to be created. That would be 20 candles. So whenever we get more than 20 candles, for example, creating this flag, then we can almost be sure that if the last swing low wasn't taken out by the channel, which almost happened here, if we take this flag here, it almost takes out this low, but it didn't. And then when we broke out, we got the continuation. If we don't take out this low, then this structure can grant us very, very nice trades. This would also classify, for example, in hindsight it doesn't look like it, but during the open markets, of course, this was a flag, quite a steep flag, so I'm not a big fan of it. But we retested this as our flip zone here. We took out these double bottoms. So for me, this is already in a downtrend. And then I'm just waiting for a signal to the downside. After we broke this, we made the local double top here. Our stochastic is coming down. Our RSI closes. This is where we would go short. And you see we had drawdown, but our stop was above these highs. So not really challenged. We got maybe 60-70% drawdown for a nice trade. These you'd simply have to ride out. If you get a drawdown in this situation and you see these dojis with the long wicks to the top, don't sweat it, because we have this huge protection here. They will work out really well. Also, don't forget the trend line, which also protects us in this case. Here's another flag. Copy this. So as soon as you see 1, 2, 3 hits, you take this line and copy it to the top. This is usually where price stops. And if we get a reaction to the upper barrier of this channel, we have a confirmed flag. And then when we break out to the low side, this is where we can get in. So flags, if you go down to the, for example, this would hardly qualify as a flag on the M5. But as I always say, markets are fractal. If you go down to the M1, this would definitely be a flag. And for flags, I already said this in another video, angles are extremely important. If the flag is too steep, like higher than a 45-degree angle, then usually they are not good for continuation trades. Angles are incredibly important for trading flags or any kind of pullback. This one here is borderline because we took out these highs. So if you copy this, I wouldn't be too happy about getting in here, even though we retested these lows and the pivot. I would not be too happy about getting in here. I would get in on the continuation down here if there's still steam in the markets. So draw these on your charts, try to recognize them. Most important is you need a drive first, and then you need a channel in the opposite direction. You need 1, 2, 3 points to connect the fourth, and if you get a reaction to the fourth point up here, sorry, 1, 2, 3, if you get a connection to the fourth point and a reaction, then the breakout at the fifth point is usually good for a nice trade.